Please, I'm a Nigerian, so no forming and packaging is allowed. Yes. You can clap. All right. This is a very important panel, and I'm very excited. We have the who's and who's in the house. Okay. Just before I introduce them, just before we start, I think it's very strategic what the kinds of conversations that we've been having all through since we started. It's very imperative to say that, and we're very excited, and we know that a lot of investments are going to be happening in Uganda. So please, a round of applause for Uganda once more. So because I'm very committed to closing the $42 billion female funding gap, I'm going to start by introducing Nela. Nela Duke Ekpeyong is a partner at Ingressive Capital. Hello, Nela. We also have Rio Yamawaki, partner at Verod-Kepple Ventures. Then we have Uwem, my very good friend. We're up awake until 3 a.m. because of the panel. You understand? Uwem is the head of investment, Launch Africa Ventures. Then we have Eric, my Ghanaian brother, managing partner, Chanzo Capital. A round of applause for them once more. So before we go into this panel, I'm just going to allow them to introduce themselves, starting from Irisuke, and then it goes to Tobi, Nela, Eric, and Uwem. Tell us about your fund.
Very nice to see everyone, and I'm very happy to be on the panel. I go by Rio because my name is extremely difficult to pronounce even for myself. So just call me Rio. I'm a partner at a fund called Verod-Kepple Ventures. It's a Series A focused fund. We invest 1 million, 2 million size of ticket investment into companies that are typically Series A stage. We started with an earlier stage investment called Keppel. We made about 100 investments across 11 African countries, including Uganda. We have one investment in Uganda. And we started this new fund, Series A focused fund last year, February, sorry. And yeah, I'm extremely happy to be here and discuss the topic. Thank you.
Awesome. Thank you, Rio. Tobi?
Hi. Okay. I'm Tobi Oke, V8 Capital Partners. We invest primarily in Series A. We do have a very small early stage fund as well. Have about $50 million AUM, and just closing Series A $50 million fund for Series A. Invested, because it's a much bigger companies. We've done about 15 companies. I've invested in a Kenyan company with presence in Uganda. So we talking to our portfolio, the MD in Uganda today. Glad to be here. Nice to my first time in Kampala. I think I was in Kampala when I was 5 years old, but this is the first time as an adult, and very impressive.
Awesome. Nela.
Hello.
Hi.
Thank you. So my name is Nela Duke once more, and I am a partner at Ingressive Capital. And Ingressive Capital, we have a 10 million Fund 1 and a $50 million Fund 2. We've invested in about 46 companies so far, and we invest at the pre-seed and seed stage. We're present in 5 geographies on the continent, and this is also my first time in Uganda, and I can say I'm incredibly impressed. So, thank you.
Awesome. Eric?
Thank you. My name is Eric Osiakwan, and I'm partner at Chanzo Capital. At Chanzo, we focus on the digital economy. We're doing 2 strategies. So we have what we call startup strategy and scale-up strategy, so pre-Series A and post-Series A. The startup, we've done 2 funds. First fund, we did 16 companies. Second fund, we've done 14 now. And then we're raising a scale-up fund that will do Series A and on. This is my second rodeo in Uganda. In 2004, I was here, I helped build an ISP here called One2Net. I don't know if Badri's in the room. And we built an IXP here, so I know a few spots around Kampala, but it looks different now. So I'm happy to come back and do some investing. So we've done 2 investments. We're in Trepesa, David's company, and then we're also in Kara, and hope to do some more.
Akwaba. All right, Uwem, over to you.
Good morning, everyone. It's still morning. Morning. My name is Uwem. I lead investments at Launch Africa VC. We are an early stage fund, and we invest between pre-seed and pre-series A companies. From our fund, which is around $33 million in AUM, we've invested in over 130 companies across the continent of Africa, showing that we're very Pan-African in our approach. And from our fund 2, we already invested in an Ugandan startup. I met the founder yesterday, and we're hoping to increase the size of our portfolio with more Ugandan founders at the end of this Science Week. Thank you.
A round of applause for that. So, jumping right into it, and it's a very, very sensitive topic. Why aren't investors investing in Uganda? Making Uganda a more attractive landscape for startup investments. And Tobi, I knew you were going to be surprised. So Tobi, I'm starting with you. And my first question, what do you think are the special factors or challenges that have contributed to Uganda being a lower priority as an investment destination compared to other countries, African countries?
So, okay. I think the first thing to say is it's actually not about, Uganda isn't being funded not because it's Uganda. It's
awesome.
It's just to do with the metrics. It takes a lot of energy, a lot of time for you to put money in anywhere. And our bosses, the people we work for, are looking for us to A, deploy capital, and B, get good returns. And for you to deploy capital, you have to be in a big enough market for capital to put the capital to work. So there's no point investing, if you have a $10 million fund, for example, there's no point investing $10,000, I'm just using as an example, when you can invest 100 or 500,000. Because if you do 10,000, you're going to have to do 100 companies, right? Mm-hmm. And each $10,000 check is the same amount of work. So in a nutshell, what I'm saying is Uganda is a 45 million people economy, and simply because of the size, people would prioritize, or investors would prioritize, bigger markets. And I think what Uganda can do is to ensure that its startups or its technology companies have very strong access to the EAC. And being part of the EAC, that changes the game from 45 million to 300 million. And at 300 million, you're a big brother to Nigeria. So all of a sudden, you're very investable. And I understand that, not every industry or area can actually transcend Uganda to Kenya, to Tanzania, to Rwanda, etc. But if you focus on creating a bigger market, a lot more capital will come in. So I think it's more the metrics, and it's also perception. People need to understand where the opportunities are. I mean, we've looked at a business that was doing exports from Uganda, and they were great margin business, and they were helping exporters in Uganda with freight services, etc. And we've invested in a similar business, I think, in Ghana. And I just didn't know that much about Uganda. Like, what's the biggest export? How big is is the flower market, or how big is other commodities, etc. So the more investors know about the drivers of the economy, the more confident investors would be that if they put money here, it would actually multiply and go to work. So the two things I would say is the size of the market and the knowledge of the investor as to what Uganda can actually export.
Amazing, amazing. Uwem, Toby said people have to be aware of the challenges, right? Launch Africa has been heavily invested on the African continent. Like how many deals?
From Fund 1, 133. From Fund 2,
133.
From Fund 2, we're going to be 7 by the end of the week.
Awesome.
Yeah.
So you've spent some time in Uganda, right? Can you share any observations, right, of unique challenges or opportunities in the Uganda's tech ecosystem that could influence the investment strategy of a Pan-African fund like Launch Africa?
I think the first one is, like Toby said, it's about the narrative around Uganda, right? There is this perception that the market is too small to, pour in capital, because at the end of the day, every investor is optimizing for returns. We're not just giving out free money. We want to make money for people that employ us, our LPs. And as such, when you check online for, how big is the startup ecosystem in Uganda, barely nothing comes up that you can use to, back data or, defend your investment decision. So maybe a more deliberate attempt at crafting a narrative that shows that Uganda is not just a thriving economy, it's open for business and open for investment. And that's very, very important. How many local tech media firms exist outside the traditional media firms? Because you find that tech media firms tend to tell the story better than what a traditional newspaper will tell. So how many people are telling that story? How many of our founders actually know how to tell their stories, right? You speak to founders and you say, oh, tell me what you're building. And again, I think it's also a function of how much training they get, but they can't necessarily tell that story in a way, say a Nigerian will say it or a South African will say it. That confidence is not there. You speak to a Nigerian and he's telling you, I'm building this for Africa. And you speak to, an Ugandan and he's saying, you see, my business is going to be built in Kampala. So already from first interaction, there's that narrative that this is not big enough for what I want to invest. So understanding that narrative drive investment decision, very important. Sometimes, yes, we want to believe that it's driven by fundamentals, but I tell you the truth, a lot of it is built by FOMO. And FOMO is led by narrative, by the stories you can tell. So if Uganda and Ugandan ecosystem can tell better stories about the ecosystem, tell better stories about the successes, then you would definitely see more investment coming to the country. I'll stop there because there's a lot to say.
There's a lot to say. Better stories, right? So Rio, speaking of FOMO and telling the narrative, right? Verod-Kepple has been involved in investments across multiple African countries, right? So from your perspective, when evaluating potential investment decisions, right, what criteria do you typically look at, and how do you think Uganda fares in comparison to such investment criteria?
So obviously there are many meticulous metrics or criteria that we use, but I think what's most important is the exit scenario. Again, we need to make money, we need to make returns, and the exit scenario, how much the company would be valued at the end of the investment period, oftentimes the end of the startup journey, is quite important. And then exit scenario is significantly affected by the scalability of the business. And when it comes to scalability, any business model, even if you call it a digital business, digitally scalable business, it's deeply affected by the underlying economics or underlying size of the industry that they are in. Even if it's agri-tech or digital agri, its limit is within the size of the agriculture industry itself. Or even if it's insurtech business, it's obviously limited by the size of the insurance industry itself. So in that sense, maybe it's also related to Tobi's comment at the beginning. You know, it's a function of maybe just the economic size itself. You know, if the overall economy is not the biggest or as sizable as other economic major houses like South Africa or Egypt, already you have a little bit of a disadvantage in that sense. Maybe to put it in perspective, for example, insurance industry or insurtech itself was a little bit of a buzzword over the last 2-3 years. There are so many insurtech or insurance API businesses coming from many different countries. But if you look at the size of the insurance industry itself, even in Kenya, I'm based in Kenya, which is bigger than Uganda, but the industry size itself is 2 billion. The gross written premium, which is a top line revenue for the whole industry, is 2 billion. And how can you scrape a big revenue? And then when it comes to a big revenue, for a startup to be acquired at a decent valuation, in my view, you'd hit maybe 10 million, 20 million US dollar revenue within a time frame of maybe 5 years with profitability. And for you to grab maybe 20 million revenue in an industry of, for example, 2 billion, which is an insurance industry in Kenya, it's extremely hard. The biggest insurance company in Kenya, for example, it's called Britam, and their revenue in US dollars is only 200 million. So it's like you are going to become 10% of the size of the biggest insurance company ever in Kenya. And then if you try to do the same thing in a digital approach in Uganda, which has a smaller economy, I think it's challenging. So I think a country like Uganda with its economy not being the biggest on the continent, I think you need a slightly different approach. Maybe you use this country as a maybe launchpad to scale across Africa. I feel this is the strategy that Rwanda has been taking. If you can, or anything else, maybe if you can open up the infrastructure industries to startups to get a bigger market share in the country, then it might be the case too. But anyway, you really need to find a way to showcase the fundamental and ultimate market size that startups can take. If the market is small, then the revenue of the startup is small and the exit is small. That's my perspective. Awesome.
So Eric, right? We hear things like valuations, how big is the market, right? And these are things like investment criteria, theses, and all of that. You've been doing this for years, right? So tell me, how do you think Uganda as a country, Uganda's tech ecosystem, right, can leverage her diversity and unique strengths, right, to position the country as an attractive market for early stage VC investment?
All right, thank you. That's a good question. So I'll build it up from some of what my colleagues have said. So the factors that my colleagues have enumerated are mostly macro factors, right? But if you take tech and VC, somehow uncorrelated. So we try to look at the micro factors, and we use the micro factors to look at the macro. So it's almost like an inverse way of looking at the market. So to your question, we look for two things. Is there a sector that a country is known for? Uganda is known for tourism. And I'll use Tripesa as an example, why we invested in Tripesa. So most people come to Uganda for tourism, right? So we asked ourselves, that's a big enough macro factor. Now the micro is, can you find an entrepreneur who is able to build something that is unique, that fits within that macro, right? So actually before we invested in Tripesa, we actually invested in another founder who tried to do this before, and he failed. So it was the second rodeo before we got it right. And the reason we invested in Tripesa was, even though the first attempt failed, and we put in $5,000, it wasn't a lot of money. But we wanted to put our feet in the water and test that water. And what we realized from that first founder was that he was able to clearly show us that there was an addressable market. The reason he failed was that he was a bit ahead of his time, and he was too focused on the technology and didn't get product market fit. So when David then talked to me about what he was trying to do, he had already gotten initial customers even without having a minimum viable product. So immediately I realized that he's been able to do what the previous founder had not been able to do, which speaks to the key thing that we look for in founders, which is execution risk. So most founders will paint you a big picture. I'll take you to Mars, I'll take you to, which is great. But then as investors, The risk you really take is execution. Can he translate that vision into reality, right? And we all mark execution in different ways. So for us, when we are doing due diligence on founders, we are trying to figure out whether they can execute on that idea that they are selling us. Can they move us from that realm of unreality into a reality that we can touch? And we found that with David, and then we invested. So it was easy decision for us to make. Because David, and I'm not, I think David is a great founder. One of the things of his background was he had worked also in a multinational and led operations in 5 countries. So it was clear to us that this was going to start in Uganda, but he can go Pan-African because he's got experience. So sometimes having the experience is important. The third is that he's a second-time founder, which is something that we started looking for in our Fund 2. In Fund 1, we only did mostly first-time founders. And first-time founders are great, don't get me wrong, and they present a different set of challenges. But with certain experiences, with certain industry, you need somebody who has a bit more industry experience. His previous startup, he was addressing a problem from his previous startup. And so he had an experience that was industry specific. And that was the third reason we invested. Right? So I'm giving this example to kind of just bring it down to reality that sometimes it looks difficult, but you got to look deeper, right? And as you look deeper and you roll up your sleeve, which is what we like to do, you begin to find the gems in the mud.
Awesome. Thank you so much for that masterclass. All right. And you see, Nela, you have done tremendous work, and you're doing in helping founders overcome obstacles, right? When seeking early stage investment. And just like Eric said, gems in the mud, right? And speaking about Africa, we have a lot of gems. Can I hear an amen? Thank you. So, Nela, same question, just a twist. How can Uganda create a more favorable environment for startups to thrive and tech to blossom?
Thank you for that question. And before I dive into how Uganda can create a more, encouraging environment, something I discovered on my trip. So we had a mixer last night. I spoke to a lot of founders. It was very insightful, but there's something that seems to be missing, which is traction. And so I think all of my fellow panelists touched on it. The market, the economy, the size, etc. But the obvious thing is that you can't have all those, you can't meet those demands unless you have traction and you have the capital to, unless you have the capital to get to your MVP. And so what I've unfortunately seen here, it's the chicken and the egg. So we say that the founders don't haven't been able to rise to the occasion, and I see that there's a lot of focus on building out skills and building out talent. However, there's not enough focus on the capital side of things. So, off what my fellow panelists have said, something I think that would be extremely important to focus on intergovernmental relations. And seeing how, I know Tobi mentioned it, being part of the EAC, and being at that 300 million number strong, as opposed to just the 40 million number. And if Uganda or the startup ecosystem here is able to focus more so on collaboration, so at Ingressive Capital, we're ecosystem builders, from our LPs to our non-for-profit to our ecosystem mixers and the actual investment vehicle. We look at the 360 picture and we call it the flywheel effect. And if you're able to bring the ecosystem together in a way that is synchronized, you optimize for success.
Awesome. Optimize for success. And listening to you talk, ecosystem, it's very important to highlight that a lot of progress that has been made has been on the strength of the collective ingenuity of the ecosystem in Africa, and hopefully that is going to continue. Brings me to Tobi. We've heard about startup acts, Tunisia, Nigeria, South Africa, and it's one thing to have a startup act. It's another thing to implement. Execution is key, right? So Tobi, and we have the government in the house. Tobi, so what key initiatives, right, reforms, do you think the local stakeholders, the government, can deploy, right, to remove most of these barriers that we're currently addressing? And I can see the Honorable Minister, she's writing, right? So what key initiatives and reforms do you think could be sprung up to address some of these barriers so that we can position Uganda as an attractive market for early stage VC?
Thanks, Dennis. I would answer that in a different way. Every industry, every country has obstacles, and every ecosystem I've been in always complains to the government to, take away all their problems. But farmers have problems, pilots have problems, every part of every business has problems. So, to be honest, I think, yes, the government has a role to play in making things easier. But specifically speaking about Uganda, taken from what some of my colleagues have said, it's clear that there are areas where Uganda has strengths. And I would piggyback off Eric. And to be fair, David pitched very ferociously to me about tourism. It was back and forth in my office.
David, you're going to pay for this. First, Eric, now Tobi.
Unfortunately, I didn't invest, so he has the scars.
He's waiting for you.
But the point is, Uganda actually does stand out when it comes to tourism. It does have advantages, right? And I think one thing the government should do is pick the industries where Uganda can stand out. Doesn't have to be 20, it could be 2, could be 1, could be 5, but pick them and then back them. Because foreign investors coming into a country and seeing that the local ecosystem has backed this entrepreneur with $10 million, they will put dollar for dollar. And what that means is that if Uganda says these 5 industries, these 3 industries, we're going to back them, these 5 companies, we're going to give them and focus on them, make sure that they deliver, because these are Ugandan icons. This is what we're going to use for the next generation. You will solve the obstacles because once the government of Uganda has put $10 million into a particular business, whatever obstacles are in the way, it will get cleared. A, the capital will clear it, but B, the focus will allow people to see. And C, foreign investors like myself will come in and be like, okay, I see the point. I'll take tourism, for example. I see the point, great chimpanzees. I was looking for them on my way here. I couldn't find them. I mean, I'm terrible. But I was like, where are my silverbacks? Anyway, but the second thing is, if I know that the local ecosystem is committed, it gives me more confidence to say, you know what, this is going to succeed. So, and the last thing I would say is, apart from backing these entrepreneurs with capital, like serious capital, it has to be clear to an outsider that these companies are being backed. The last thing is openness. Openness to working across EAC, extending it, showing love to Tanzania, Kenya, whoever. But the point is, in the long run, it would end up paying Uganda. My 2 cents.
Awesome. Thank you, thank you. And I love what you touched on because we have our tech journalists in the house. Hardly any tech article you would see a lot about the local investment community being nascent. And you would agree that a large part of the funding that has come into the African tech ecosystem is largely foreign driven. So moving forward, what role do you see that collaboration between foreign investors, local stakeholders, what role do you see that collaboration playing in fostering a much more robust and diverse venture capital ecosystem?
Thank you for that question. What exactly is the definition of an ecosystem? An ecosystem is a combination of different parts playing their functions well and operating together in tandem. And you cannot build a thriving ecosystem without all the stakeholders playing their parts, from the government to the private investors to the founders themselves to the regulators to the foreign investors and all. And like everybody has said here, oftentimes you don't expect a foreign entity to come back the ecosystem if the locals are not doing it themselves, if they're not putting their money where their mouth is. So we know a lot of ESOs exist in Uganda, and well done for the job that you do, because we see that in the quality of the founders that we speak to. But much, much more can be done. And it's not something that happens in a day. I mean, Silicon Valley wasn't built in 1 year. It took years. Venture capital didn't start today. It took years. So it's a painful process, but we are getting there. As Uganda and as the African continent, when we talk about the big four, the big threes, you still see that it took a painful process. Tobi would recall that in 2005, if you were cutting a check of $5,000 to it was unheard of to actually give somebody $5,000 to fund their business. And at that time, you would ask for 50% of the business. Unheard of, right? But now, people are raising $1 million like it's their pocket money. Obviously, it's not your pocket money. But Uganda will get there if everybody actively plays their role. As the ESOs are working, the government is actively backing the founders and creating an enabling environment for everybody to operate. You cannot out-innovate bad, policies. That's just the truth. You can sidestep. We always do that in Nigeria and across Africa. But in the end, bad policies would eventually slow down the growth. So, the government has to play their role. The founders themselves have to play their role. You have to be ambitious. Nobody's going to back a founder that is not ambitious enough, right? Again, back to what I said about narrative. You have to be very ambitious enough. You have to understand your business. Nela talked about, understanding the metrics. If I'm speaking to you and you just want to build a traditional business, don't expect a venture capital or a venture capitalist like me to invest in your business. Also, understand the various alternative funding sources, because equity is actually, I know I'm a VC, but I'll tell you for a fact, equity is one of the most expensive investments you can raise. So start thinking about alternative funding sources. And yes, the traditional institutions, the government also have to provide the pathway to those alternative funding sources, be it debt capital or grants or whatever the case may be, but start thinking opportunities than thinking of, we don't have that much investment in us, people are not backing us, they say we're too early. Start figuring out creative ways to outgrow those problems, because eventually you would outgrow those problems if you just keep on hacking at the problems and working hard at it. Thank you.
Thank you. And speaking of, so our panel ends in the next 10 minutes, so we're just going to keep it concise, right? And you would agree that it's been very engaging, right? Highly conversational. Awesome. So, Rio, he talked about alternative funding sources. In your experience, what steps do you think local founders in Uganda, right, can take to make themselves more attractive, right, to investments coming into the ecosystem?
Exit. So they need to see exit again. I think that's already happening in Kenya, I think. There are several local investment groups. Normally it started with a circle of friendship. Normally the business owners or maybe senior executives of big corporates, like the likes of Safaricom or insurance companies, those guys started to pay attention to angel investment. I think it started about 10 years ago, like early ones 10 years ago, more active maybe 5 years ago. And then I see some actual exits from these angel investors. Not the full exit as a company, but because they came in very early. At the pre-seed stage, stayed on for 3-4 years, and then they managed to sell their stake to the subsequent investors. I see that happening in Kenya. So I think if you can, to stimulate interest from local investors, I don't think you need a full-blown exit to showcase. What you need is to bring in institutional investors who can write maybe 5 million, 10 million type of ticket size, maybe Series B type of investment. If there is a group of angel investors who has been in that company who is raising Series B, and then see that Series B investment come in, 5 million, 10 million, whatever, then there should be an opportunity for these investors to sell off these stakes. And then there will be a ripple effect, because these guys will whisper with each other that, oh, I made 2x. Of course, it's not going to be 100x return, but maybe 2x, 3x within 2-year, 3-year time frame. And that's the snowball will start rolling off. So I think, yeah, to put it simple, maybe you'd want several proper Series B rounds happening in Uganda, I think. I know Tugende was there, but they're a bit in trouble, unfortunately. But if you have several more of that, I think that will affect a lot.
Thank you. So as this panel comes to close, Eric, I've been to Ghana a couple of times, right? And I'm aware of programs.
Ghana is Uganda without a U.
Yes. So I've seen programs, right, that Ghana has initiated to nurture the development of startups, right, and just growing a more supportive ecosystem. So what programs do you think the Uganda local stakeholders can initiate to also nurture local talent and startups in Uganda?
So you need a strong talent pool for this stuff to work, right? So the academic institutions need to start producing the talent that tech companies need. And this needs to be a very deliberate effort. Otherwise, what will happen is that you have founders here and most of the teams will be outside of Uganda. So having the academic institution being deliberate about producing computer science graduates, engineers, software developers locally is super important. And that is also another way that you can jumpstart a whole new activity around outsourcing. So one of the ways that India made its way into technology was, I don't know if you remember Infosys. There was a famous Indian company. So the Indians who were in Silicon Valley decided that they were going to start outsourcing Silicon Valley development into India. And they first started by forcing institutions in India like NIT to produce computer science skills, programming skills. And then they would start outsourcing jobs into India. And that's how Indians started learning, and then slowly they became, and today, Indian developers are some of the best in the world. And so companies outsource talent to India. So that's one strategy that Uganda could take, is that, and I see that Makerere is one of the best universities in Africa. And I see a lot of very amazing academic institutions. If you can get them to focus on producing the talent pool that this industry needs, that's another way where you can start driving outsourcing from the sub-region, even from Africa, from Ghana, from everywhere. You can have engineers here who are writing code for the rest of the continent, and that's a way to jumpstart the economy. The second is related to that Ghana did, which you can learn is, in 2014, we passed an act that created something called the Venture Capital Trust Fund, where the government deliberately puts money to back VC fund managers. And we benefited from that. And that's how the VC industry was jump-started in Ghana, where the government deliberately started allocating to VC because VC was seen as a much more risky asset class. And then now the government has liberalized that space that pension funds and endowments can now start backing VC. So suddenly you see more capital going there. And once you have that local capital going there, it will attract more foreign capital.
You want to touch on that?
30 seconds, just wanted to add that it's not just tech skills, right? There are actually non-tech roles that have to be filled, the strategists, the project managers, the operations managers, and those are core skill sets that we actually lack on the continent generally. And it could be that Uganda could be that city or that country that produces the best managers in Africa. So it's not just the tech talent, it's also the non-tech talents.
Non-tech talent.
Sorry.
Awesome. David, did you get that?
Sorry, Dennis. I wanted to add to my colleague here's point.
I love this panel.
Because I'm not sure people got what he was saying. You need a full cycle for investors to believe. And everybody has been talking about cycles. So it's about early stage investors, local Ugandans, they put in money. The government needs to think about getting them the full cycle. Because once they come out, boom, you don't need to write any article. When people came out of Paystack in Nigeria, everybody knew. It was clear. Entrepreneurs, people were backing other people. In fact, I have so many traditional investors as LPs, and they call me and say, hey, Tobi, this thing works? I'm like, of course it works. But they only said it because some of their friends or people that they know got exit. So what he was saying is super important. Making sure that people come out. So you need to make sure the early stage guys come out. You need to make sure that the later stage guys believe that something can happen. But once you show one cycle, boom, you're off.
Thanks. You said boom twice.
Just one thing.
Okay.
Just
we have 5 minutes.
Yeah.
Can you keep it very short?
Very short.
Very short.
To his point of non-tech talent, I want to add something. Like, we need someone in financial capacity, like a very robust one. Because unfortunately, when companies grow, monies get stolen in some way or another. It's a big program. Basically, we need to find ways to institutionalize innovative business ideas into proper organization. After Series A, you have to think about it really. It's a big problem, not only for Uganda, everywhere. It's a big issue. So we need, because Uganda is still not at that point, having many Series A, B, but you have to think now ahead for maybe 3 years, 5 years to come, to have the talent pool to make sure these companies will become institutions. Otherwise, money will be stolen everywhere, I can guarantee.
You've just given me my new slogan for Uganda. Think now. Think now. Thank you. Nela, thank you for your patience. I know you're thinking now. So, just before we take final parting shots, Tobi talked about Paystack. Very interesting transaction. So we're talking about success stories. At Ingressive, what success stories do you think the Uganda tech ecosystem can learn from?
So what success stories? The reason I was raising my hand was
yes, you wanted to piggyback.
I was very happy you said that, because I wanted to add on that corporate governance is key. So as Segun said, think now. Unfortunately, we've seen a few bad actors in the ecosystem, and because of that, it has made foreign capital a bit more skittish. And we're also aware of the macroeconomic situation globally. So if we're building out a vibrant entrepreneurial ecosystem in Uganda, I want everyone to be extremely cautious about the now and the corporate governance and how they're managing their finances and institutionalizing it. And so back to the question.
Tech ecosystem can learn from.
What can Ugandan tech ecosystem learn from investment stories in Africa? I would say, so at Ingressive, we invest in Nigeria, Ghana, Egypt, Morocco, Kenya, hopefully Uganda next. What I think that a lot of these economies have in common, one, it's global penetration. This was something that was touched on yesterday. The cost of data here is a bit higher than we see in other thriving venture capital ecosystems. So getting that down would do a tremendous amount of good. So it's mobile to penetration, obviously the population and how we can use partnerships to bolster that. And in addition to, we're also looking at GDP per capita. At Ingressive, we focus at around 2,000 to 3,000 GDP per capita when we're investing in the economy. But when it comes to like actual success stories, I mean, Tobi gave the extraordinary one of Paystack. We were investors in Paystack, and we were actually their first check into, we were one of the first checks into Paystack. And what we were able to see there were, one, the tenacious founders. They were also able to have a very clear pathway, which is something that we see missing in a lot of entrepreneurs today. So having that clear vision, understanding how to execute, and being flexible in the ecosystem to pivot if necessary is something I think can be learned within this ecosystem.
Thank you, Nela. So we want to look back at this summit. We want to look back at these panels and smile with that sense of fulfillment that most of these suggestions are being implemented and we're seeing them come into fruition, right? So just as your parting shots, very short, we have the ecosystem in the house. What's your advice, that one advice to leapfrog, like my Oga stressed yesterday, to leapfrog Uganda and put it on the map? So we're just going to do like this. Yeah.
Keep organizing this kind of event. It's impressive, The first step is to come and show up. Like, let investors show up, understand, and communicate. So I very appreciate this opportunity. Keep doing it.
Thank you. Tobi?
Hello? Yeah. Back your entrepreneurs to the hilt and let the outside world know that you're backing your entrepreneurs. It would increase confidence.
Back them. Back your entrepreneurs. Thank you. Nela.
Tobi took my point, but the government is supposed to be a catalyzing factor in this equation. So once more, back your entrepreneurs, but also create an enabling environment. And I know there's a lot of talk about AI right now. I think it's important to focus on core infrastructural issues that are addressing the nation and maybe not leave AI to the West, but let's focus on what is most crucial to the economy right now.
Awesome. Eric.
So we've done 2 investments. We're going to do a third one. And our focus
Interesting.
is how do we get these 3 to be very successful? And then the story will tell itself.
Story tell itself. So we're looking forward to your third investment, or fourth. Uwem.
I'm going to take a slightly different approach because I'm the last person.
You're a Nigerian.
Thank you very much. The audacity. So I have 3 words, 2 for founders, 1 for the ecosystem. The first one is the art of going to market is what gives you product market fit. Keep building, keep working. You can't just sit down in your room and expect to get product market fit and say, oh, the economy is bad, it's not happening. Except you're executing, you will never get product market fit. The second thing, which is counterintuitive to what some of us have said today, is focus on the profits. It's not about the market share. Make money. It's what actually interests investors if you see that you're making money and can scale that over time. And lastly, to the ecosystem, money flows as a result of stories. The storyteller is the most powerful person in the world. Tell your stories.
Awesome. And clap. And mine is think now. Thank you.
Another round of applause for our investor panel and the very important conversation around why aren't you investing in Uganda and how can we make it easier for you to invest in Uganda. As they take their photograph, I would like to apologize about the air conditioning. It should be on in a few minutes. Something about the generators. Thank you very much.